starters, a few years back, I decided that the United States had lost its flagship in the world through de-dollarization and a whole bunch of other things, including the fact that I became a very, very big believer in the BRIC nations. Not that I want to see it happen, because America will suffer because of that, but it seemed the realization and where things were going. So I always assumed and made my investments based on the fact that that would grow and continue. When Trump won, I spoke about a short period of time that the Trumpsters, so to speak, would have this enjoyment, but by coronation day, I would want to be out of the stock market. Certainly the clients of our planning group was told that, because I felt he was going to take actions that would come back to bite him. And I believe he has. I believe he took a much too hard stance, in a sense, kind of like a bully in this trade situation. And one of the things I spoke about, and it came to fruition, was that he was not going to have the Fed on his side. There was no doubt in my mind, and it's Monday morning quarterbacking, but I said this many weeks ago, that him and Powell did not get along, and that it would probably be the most adverse relationship between a president and a head of a Fed at a key time economically and politically in America. And I think one of the biggest pieces of news that did not get a lot of coverage, and I think people need to focus on this going forward, is that South Korea, Japan, and China had a meeting and announced they want to talk together about a trade pact away from the United States. And people don't know that if you want to talk about two mortal enemies for hundreds of years, it's China and Japan. So the very fact that that's happening, my dear friends, as you are in Canada, the two greatest partners, America's never had better friends in all their time than Canadians, are all not caving in the way that I think Trump thought was going to occur days after he made these actions. And that sets up for some very tough times ahead. I've been saying this for weeks, ever since Trump, I don't even know if he was made president, but it was certainly after the election, he made a comment, something to the effect of, anybody that's in the BRICS, if you think you're going to trade, we're going to crush you. And I said, in fact, that statement, and of course now what he's done, he's the single best marketing piece. Who's ever in charge of getting new members to the BRICS has to have a smile, because these are the type of things that actually going to chase people away. I said to my clientele and my followers a few days ago, if you believe that at the end of all of this, more people in the world are going to be more happy to deal with the United States, then I'm not for you. If you believe they're going to be less likely to want to deal with the United States, then maybe you want to continue listening to me, that this will end up being more negative for the United States than positive. You know, what was interesting also that wasn't covered in that very same speech is how much he spoke about not only the deficits, but he also spoke about the real gorilla in the room that no one wants to talk about, and that's Medicare, Medicaid, and Social Security. I was astounded that he would even bring that up and all, but he said what a lot of us have said for years. He finally said as far as a Fed governor could go. Yeah, I think if worse comes to worse and there's a complete meltdown, but I think he's prepared, and he's going to argue even today as we speak, the claims have not dropped off a lot. We saw a little break on the consumer number. I don't think that'll continue, because I think this tariff stuff is going to raise inflation, but I don't think he has to be in a panic mode. And I say this, these people are human beings, and personalities inside help make their decisions. And I can see him waiting longer than he might have done under another president before supposedly, putting in a Fed put and all. I don't think the Fed has the power that it once had. I don't think it's reflected. They lost that through the word transitory. They really blew that move. And to hear Janet Yellen, who, when I think historians when they look back at this era and say, name the three top people that did more harm to America than anybody else, both as Fed governor, as secretary treasurer, she'll be in the top three. And yet she's out here throwing Trump under the bus too. So yeah, the Fed will eventually need to, especially if the market really accelerates to the downside. But I don't think they're prepared to jump in as fast as they might have otherwise if somebody else wasn't in the presidency. And I'll tell you this, I wouldn't put it past Trump firing him. I mean, he's that type of person. There's nothing really good out of this. That's why I keep this negative kind of defensive position, even though it doesn't help business, but it is what I think is the proper stance. Well, the big difference is that there's been huge physical demand. In 1980, it was a paper-driven market that drove gold up. In fact, all previous rallies. But this is unique. This is what made me sell all my stocks in 2021 and own gold and own it all the way through here, simply because the tremendous physical demand that's been happening. And not only that 33 countries decided to repatriate their gold from London and New York to own it as well. So we knew something was transpiring. These central banks can't flip that. It isn't like there's buying it so they can make a profit and sell it one day to somebody else. So there's a huge change. I have a caution and a positive about gold. The caution is we moved very far, very fast. Even people like us that watch it every day are going, wow, I can't even believe it's here and all. So there's a 10% or so really sharp correction somewhere. But does it happen at 3,300 or 4,300? But I still think eventually prices would be higher. And here's what you have going for you. So I entered the business in the early 1980s, and the Dow had traded just between 700 and 1,000 for 12 years. In fact, they were so negative about stocks for the future that Business Week ran a famous front page called Equities Are Dead. And interest rates were 20%, inflation was double digit. Japan was taking over the world at that time, not China. Oil was going through the roof. Wall Street had no vision of the stocks ever going up. And this man that no one knew about came out and predicted 3,600 based on a technical analysis, again, no one knew about. His name was Robert Prechter Jr., called the Elliott Wave Theory, and he predicted this 3,600 on the Dow. And I remember vividly, even shows like Wall Street Week with Louis Rukeyser back then going, who is this guy? There's no way the Dow can go. It can't even get above 1,000. And the reason I tell that story is I'm not saying that gold's going to 40,000 too, but understand just because something traded somewhere for a long period of time doesn't mean it always has to stay that way. So there are people going, oh, this is just crazy. Gold's way overpriced. It normally shouldn't, it always used to trade. You're not supposed to say this, and it's normally deadly, but I think this is one of the exceptions. This time it's different. This is a whole difference of why gold has gone up than anything that we've talked about before. And let's face facts. When you have physical buying so greatly outweighing that the paper market, which used to basically control the price of gold, is gone, then as long as those physical reports continue and there's nothing that has changed on that, you have to assume the price can go higher over time. I've sold all my general equity stocks back in 2021 to own gold. So I've not been a bull on the general equity market other than when Trump elected. I said there'd be this initial enthusiasm, but by coronation day, the market could rally. Wall Street is, I've nicknamed it the don't worry, be happy crowd. I say this seriously and not any individual in mind, just in general, that the average financial advisor could be tossed off the top of the Empire State Building and all the way down, they'd all say the same thing. Hey, so far, so good. So there's a tendency in the financial service industry to always see the cup half full. Then there's a certain group, we used to be called hard asset group, that kind of died, but doom and gloomers or whatever, they're always seeing the world is coming to an end and, so forth and so on. Now, I don't sell anything that benefits from predicting the world. In fact, my financial planning business has suffered from me taking such a bearish stance. But what I would say that I'd be closer to a Peter Schiff than one of these guys that appear on that certain network that always kind of say, buy the dip, it's always going up, it's going up. And the main reason I also say that is almost half of all licensed financial advisors practicing in the United States right now weren't even born when I started. So I believe a lot of them have been used to driving on a one-way street. And that's great. You can become a great driver driving fast. And the odd time there was this accident, this thing called the Fed came along, this tow truck, fixed the put and cleared your avenue to go. Now at least there's two-way traffic. We may even be approaching traffic circles. My concern is that the professionalism of the financial service industry may not have the experience to understand it doesn't always go up and may prematurely act poorly. And here's the big one. When I started in the business, 87% of the trading was done on the New York Stock Exchange. And back then there were only two exchanges, New York and the Amex. 13% was institutional. Now over half the money that's in the U.S. stock market's in passive funds. And those funds, those managers are not actively managing it, nor do they have independent discretion. They're there to track an index, an indice, and as long as money's flowing in, they have to put it to work. They can't make a decision. Well, the same thing happens on the downside. If those people start to take money out of those funds, the manager has no independence. Go, whoa, I'm not selling that. That's too good of a company. And that's what we've lived with. That's what we're seeing the change now happening. And that other supposedly half that's left in the U.S. stock market, 2/3 of that's trading by computer algorithms. Maybe just a headline story. It could be a sophisticated trading program. Individual ownership or part ownership of businesses, what the stock market was originally created for, is such a small part of the stock market now. So what I tell everybody with gray hair and no hair that goes back to my days is you can't look at the market as you did 30 or 40 years ago because it's a completely different species. And one of the concerns that we witness now, and this is why we're having these 1,000-point days, is that the individual is no longer the influencer of what's happening in the market. And now there's people trading with information that's so much superior and so much far ahead of the crowd that it's a great disadvantage. We just saw this in the last few weeks. Why did we see such great call buying and things a couple hours before a bullish news, and then we saw some put buy? Because people don't want to say this publicly, but it's true. Certain people have distinct advantages over others when it comes to financial markets. Well, I feel that the reset was coming outside the United States, and that's why the BRICS and these central banks were buying large sums of gold, because they knew that the world has become too indebted. It's not just a debt problem. It doesn't just exist in the United States. It exists through much of the Western world, and that someday, somewheres, something is going to have to be done, and people aren't just going to accept fiat currency anymore. So I believe it's been underway. Whether or not the United States, some of us thought a few weeks ago when we started hearing talk about gold and is there gold in the Fort Knox, some of the pundits came out and started going, oh, maybe we're going to have some type of gold back. And that still may be in the back, but I think the United States is outside looking in. I think they bullied their way into a corner where there aren't going to be as many allies that might have been in years past. And Trump is not a person that likes to cave or, in a sense, admit wrong. You know, I like to say that he's the Fonzie of the 21st century of politics. And if you're old enough to remember Fonzie, the one thing he couldn't say was, I was wrong. And that's something that normally doesn't come out of Trump's mouth. And I'm afraid he may dig in even harder, even if more things start to turn against him. I think what people need to understand here is this is a unique situation. We've never been in this type of situation because in years past, when there's been financial crises and all, we had more tools at our disposal. Even the Fed doesn't have some of those tools anymore. We certainly can't, like we did in COVID, suddenly create another $7 trillion out of thin air. What people would think suddenly if we have a $40 or $45 trillion debt would be amazing. But there's one thing we didn't discuss here, and that is the political fighting that is occurring both on the social and political front. I really believe the United States as citizens, we've never been more divided than maybe other than the Civil War right now. There's a left and a right. The middle has shrunk. You either gone this way or you lean that way. The true middle, it doesn't seem to exist. And if you try to exist, you get hammered from both sides. I have that in my own household. My wife is a Trumpster. She's a MAGA. I'm neither against him or for him. There's things he does that I like and there's things he does that I don't like. It's very hard to be in the middle ground here and all. And I'm afraid that both the social and political economic problems are coming together to really form this near perfect storm of trouble. And I don't like saying it A for business, and I don't like saying it because of my faith. But right now, it's a troublesome time to look at all those things.